Thank you all for logging in time. Let me quickly introduce the speaker for today, Ms. Anjana Vivek, and she's going to take a very informative session on accounts and finance, a sorted person, and who's someone who's really my go-to person when anyone talks about business model, accounts and finance. I quickly plug them across. So be it for mentoring, be it for speaker requests, she's always been available. In fact, with her travel schedule, we happened to miss her for the business model session, which she took last year, and people still use those resources. We have them saved as PDF. Should anyone need it, they should definitely reach out to me and I will be happy to share that. And yeah, please make notes, ask questions, make this interactive. And this is an experience you will not forget for life. So yes, over to Anjana. Thank you so much for being here, Anjana.
Thank you, Shreya. You've set the expectation bar really high, so I'm a little worried. Anyway, folks can tune that down. Yeah, let's hope we enjoy this. So my other attempt is to make people enjoy the session, right? So that it's fun for us. So please, put aside your worries and yeah, let's get in. Okay, so yeah. So what I'm going to talk about, my session basically is going to look at your math elements. Okay, like I said, finance is all about understanding basic elementary arithmetic. So the key elements which you may like to focus on as entrepreneurs, this is just some suggestions. And then of course you fine tune it depending on your business. And how you develop financial models, how can you plan for finance? Then what do you do from a long-term perspective? How do you keep an eye on the finance and reset some things or take some things forward, right? So that's basically the session content. So, when I come to this is the question I was asking earlier also. Just articulate for yourself at some point saying, what do you want to know? Why do you want to know the finance? And from a business point of view or a startup point of view, what do you want to know, right? It's good to articulate because then you'll have some starting points. And some of these questions I'm throwing here are not for you to answer now, but are for you to think through and jot down, right? Because I think as entrepreneurs, you really have to spend some time reflecting and thinking about your business and where you want to go. Unlike in a corporate environment or in a school environment, where you're given some assignments and say, broadly at least, somebody is there to monitor you. Here, as founders of startups or even in charge of some units in startups, pretty much you have a whiteboard and you can discover and decide which direction you want to take. So that comes only with some research and some reflection about where you're going. So I would urge you to look at some of these questions which I've put throughout my presentation and come back to them periodically, and they may change from time to time. So, the maths, I think, as I was mentioning earlier, it helps, it's an output, the numbers. It helps you to make decisions and understand if your business is healthy. Now, just coming back to why you started the business, because the math is the output, right? It depends on what you do. And what you do depends on what you want to do. So which is your dream? So we look at your business goal, like why do you want to start? I mean, dreams can be very powerful, like saying putting a man on the moon, right? I want to fly, right? That's how the Wright brothers started saying, I want to fly. We want to fly. So what do you want to do? I mean, why are you in this business? Are you wanting to be the best, or do you want to be the richest person? So different people have different reasons for starting entrepreneurship. Some want to make a social impact and change lives of people, right? So what are the things, one or two top things which motivate you? And then, anytime, because as an entrepreneur, I would like you to reflect on that. And those are your guiding posts. Okay. And even for finance, because otherwise, finance is not carved out of the business. It is a part of your core of what you're doing for the business. It's the language of business. So this will reflect, the finance will reflect what you want to do and your dreams. So if periodically, if you toggle between, say, your dream and what's the reality, you will know if you're getting there, or whether you can get there in 5 years or 10 years or 15 years, or you're going far away, right? Or you have to give up and change your business model, or just drop your business, because 90% of businesses don't succeed. They don't live beyond 3 years. So if you want to be in that 10% which succeeds or which continues, this finance really helps you take a measure. And let's look at which are the key elements which help you take a measure of whether you're reaching your goals, right? So the 4 items which I have been, doing this now, teaching entrepreneurship for several years, more than 2 decades, right? And have dealt with multiple entrepreneurs. I've been an entrepreneur myself. So I've tried to list down 4 key things which one may like to look at, and which could be the, like you say, the top 80% of your thinking, right? We talk about that. 80%, 90% of the items don't need, they need only about 10, 20% of your thinking time. But there will be 1 or 2 critical items which need to take up the majority of your thinking. And these I would classify as the top items. So the first would be your revenue, because it is about getting money. Okay, unless you're in a social venture, then also I would talk about it not as revenue but as customers, right? If you're talking about impact, I can actually make it revenue / customers. So if you don't reach out, so if you're talking about social impact business, if you don't reach out to, let's say you want to make a difference to say 100 children, right? If you are only touching 4 or 5 children, then you're not meeting your goals. So that is the topmost priority. Any business exists to serve its customers, and so the revenue, right? So that's the first element and the key element of any business. Then, of course, it's about the profits and your costs, right? And how are you and that becomes important to understand, because if you don't have your profits, right, then you cannot survive for the long term. Any business that you look at, there are many businesses which have been 5 years ago, 10 years ago, which don't exist today. That's because they've not kept an eye on the costs. And you may talk about, like supposing, for example, you look at the e-commerce business. Okay. If you look at a Flipkart, for example, Walmart purchased it. So they've still not turned profitable. But those are unusual business models. You cannot generalize and say, I will also be a Flipkart. I will also make money from advertisement. Okay, it happened to somebody at that point. Google, Facebook, etc. That was so many years ago, right? To say that you will also survive for many years, unless there's somebody to pick up the cost, at some point you look at turning profits. So, and as a chartered accountant, and we're very conservative, we really don't like these models where there is no profit visible at some point, unless you just want to burn money and there is a lot of money available, right? So that is possible. If you're in one of those categories, then that's very unusual and that's fine. But from a normal point of view, costs and profits. So when you take out the costs from your revenue, you get the profits. So that's something you must keep an eye on. The other factor which I'd like to talk about is cash burn. And this is very much within somebody's control. It also depends on your financial model. So I will talk about the financial model a little later. So when we talk of cash burn, what it means is, it's money. It's almost like we talk about in Diwali, we burn money, right? We burn crackers and that's gone. And of course, it leaves a lot of pollution also. If you have a very expensive office, right, in a very high profile area in Bangalore, let's say, you're paying so much money on rent. So there was, this business which started, and they would spend crores on rent. And within a couple of years, all the money they had raised was, a lot of money was gone in rents, and they had nothing to show for it. Because they said, oh, we are in this retail space, we are in this line of business, we need to have a great office. But ultimately, all the money they had was spent in rental, And so if you're not able to survive, what's the point of saying, that's the basic. Some question? Okay. Yeah. So that is what we mean as cash burn. It could be rental, it could be salaries, right? So how do you, from a business model point of view, there are ways of looking at how to minimize the cash burn, right? There have been instances of revenue
Hello?
share for a rental.
Hey, good.
Uh, there's some disturbance. If somebody could mute their mics, yeah, whoever that is. So there are business models which help you minimize cash burn. For example, there was this time when there were mall owners who were having, the rentals, the malls were going empty. So one of the retail chains spoke to the landlord saying that I will not like to pay, say, whatever, 20 lakhs rent. Instead of 20 lakhs, let me pay you 5 lakhs rental per month, and I will share a percentage, 5% of my sales. So in this way, the cash burn is reduced from 20 to 5 lakhs per month. And there's a commitment only if there's a sale. So that is one from a financial point of view. From the other point of view, what happens is when the landlord is saying that is being told that he'll only get 5 lakhs, he has to make up the 15 lakhs, right? And it may actually not even be 15 lakhs, it could even go to 20, 30 lakhs. So that's the upside if the sales are really good. So what will the landlord try to do? The landlord will try to push the sales of this retail chain. So the landlord actually effectively becomes a partner in selling. So the landlord will push more for the sales. So in this way, this is what I mean by financial models and cash burn. You can be a little innovative as a startup. I'm just giving you one example. And this is based on a true experience of a retail chain. So when you get into business, you look at all these elements and look at how you can change your financial model. So when you look at finance and accounting, it is very strategic to the business. It can be strategic to the business, like in this case where the mall owner was converted into a partner rather than just being a cash burn, right? So look at your elements of key costs and look at it creatively. And that's what I'm trying to push in my finance and accounting session, saying, don't think of finance just as an output. Think of it differently, as something you can actually look at very carefully and significantly change the way your business is going and make it turn around, right? Or become unique and take leadership position in your space. So that's one thing. Then finally, of course, the fourth item we talk about is value. And I was talking to somebody else also who's a leading faculty in the entrepreneurship space, and he was saying the same thing, that 80-90% of the entrepreneurs don't seem to understand how to value their business, or they are overvaluing or undervaluing their business, and so they lose out, right? So what is this value, especially in the Indian context, right? So how do you understand value? What do you do on valuation? How do you create more value? What are the ways in which you can increase the value of your business? So look at it from a value creation perspective, and not just a finance and number perspective. And value does not mean artificial value on paper, right? There are some of those, and of course it's coming down now post there's recession happening and COVID. Valuations are reaching more realistic levels, but very often there are entrepreneurs who say, okay, I don't care, I just want to make mine a valuable business, sell it and make money, right? So they're just trying to increase the value on paper. That's not the value I'm talking about. I'm talking about true value of a business, making an impact, making a difference. And that, if you make a true genuine impact, right, then the value will also go up. So I want to just give you one small activity. Who are your customers and how will you earn revenue? I'd just like you to take a minute and note it down, right? If you have a piece of paper or a device where you can write it down, put it down, just list down there are two different elements. I will get into this. I just want to give you a minute to think about customers and revenue. Okay, so I'll give you an example of customers versus revenue. Google, Gmail, we all search Google. We all, are on other social media and sites. So if you look at Gmail, if you look at Google, the customers are the ones who are visiting the sites, but the revenue comes from the advertisement. Okay, not all most customers don't pay. I mean, individual customers may not pay unless it's a business customer. But the revenue is not coming from the customer. There are two types of customers, right? So one customer is people like you and me who may not pay. Then the other customers are the advertising companies. But if the revenue is coming from the advertising companies, but if Google did not pay attention to customers like you and me who did not pay, they would not get revenue from the other customers who are paying customers. So when you have your customers, separate from your revenue, you need to actually understand the difference between the two. Okay, list both your customers and your revenue streams, and sometimes they may be different. Then what are your service lines, product lines? Relook at these, right? So this is all some activities I'm giving you. So for example, the customer segments could be business to customer, business to business, right? Simple things like, there was this one site which was in travel, okay? And he was saying that he's looking at the last mile and he's saving somebody money. So though this was about 10 years ago, and when people were just getting online with the travel business. So what he said was, instead of somebody paying 5,000 for a hotel room, I will reduce the cost and make it 4,000 or 3,000. I will save them 2,000. But really, he did not address the main need of the customer was to have end-to-end, right? So the customer who's spending 50 or 20K on a ticket would not really worry about saving 1,000 if he got the convenience in one place. He would rather go to that. So I'm just throwing some numbers, just these are not the true numbers, but just so that you get a sense of how, from a business model point of view or a revenue point of view, the entrepreneur had not thought through this, right? So what happens is that in your line of business, you need to think through end to end and understand what are the sales volumes, what are the activities, will you touch the customers, right? And that's why the math becomes important. So relook at your lines of business and the percentage of revenue you're getting, profitability, etc. The next activity I want you to look at is what are your key expenses, right? What do you think are your key expenses? Just put it down. It may all be mixed up. So I will get into the categories of expenses now, right? We're now getting into a little bit of accounting. So I'll give you a minute again, like earlier, because I want you to customize this session. So I'm doing a general session for everybody, but I'd like to get it customized to you by these. And so if you have questions, you can come back to me in the Q&A, or like I said, later on email, right? Or LinkedIn or wherever, right? And Shreya will be able to give you my contacts if you want later. Okay. I hope you've listed down at least 3 to 4 key elements of business, of your expenses. So, Yeah. So expenses are typically classified into capital and revenue, right? So when we talk of capital, these are expenses which are not there, like say every month. I will actually rather start with the revenue expenses, where you're talking of employee costs, rentals, right? Power, printing costs, telephone expenses, which are repeated every month and periodic, right? It could be once a month, it could be once a week, right? And if you're in having some production, then your raw material purchase, right, that's also periodic. Then your sales, your conversion costs, operating costs, factory expenses, etc. So that is your regular expenses for running the business. Then you have one time expenses. So for example, if you're building a factory, the land, the building, right? If you've purchased some space, the land cost, the purchase cost for the building, the setup costs, right, for computers, for your vehicles, your product development costs. So that again becomes a little tricky. So which is where you need to go talk to your finance and legal professionals to understand what are the costs. For example, sales. If you're developing a product, some amount of salary will go towards developing a product, right? And some amount of the salary is going towards maybe selling the product or continuing to maintain the product. So one part, which is the initial cost, which is in product development, can be taken as initial one-time cost and capitalized. So we talk of capitalization of some costs, and there are accounting guidelines. So that's where the professional comes in and has to look at it carefully and look at your paperwork. So you'll also have to support all these costs with paper or electronic trail. So if you're purchasing it, what are your invoices, right? What are your payouts, like your bank statements, right, to show that you've spent the money. So link up to your material coming in. So if you purchase some material, so you really need to show the trail, saying, okay, I put a purchase order, then I got so much of it, 80% of the material came in, and that has come into the factory. This is my record for the goods coming in. This is my record for my payment could happen after 1 month, quality check. So all that trail, and then that gets into your accounting system, saying this is the cost of raw material or cost of vehicle or cost of computer setup, etc. So you need to keep the trail of tracking the costs, and we call it paper trail because traditionally it used to be on paper. Now of course you have very systems, and but you need to kind of support it. So if there's a query sometime from a statutory authority to prove that you really actually have purchased this or paid for this, right, or you've received some money in as income, you will have the trail to show it, and it will be linked to everything. So those are important to track. And coming back to expenses, capital and revenue. So capital is defined as what you need to set up and run the business from a long-term perspective. And capital expenditure is usually subjected to something called depreciation, and I will come to that later. And revenue expenditure is that which is repeated and is used for your day-to-day operations of the business. It relates to operating the business, whereas capital is related to setup of the business, right? So there's a setup and there's an operating, running the the business on a day-to-day basis, which is your revenue expenditure. Now, depreciation and amortization are words which you would be coming across. So depreciation is typically, let's say you purchase a computer and for say 1 lakh, okay, and you're going to use it for 2 years, right? So the cost of the computer, when you're looking at the cost, that 1 lakh is what you pay maybe today, but you're going to use the 1 lakh over 2 years. So depreciation, the technical way of looking at depreciation, and I'll give you the language, is it is an allocation of the cost over the period of utilization of useful life of the asset. So here we are talking of the useful life, which is 2 years, right? And so the cost of 1 lakh of the computer has to be taken over this useful life of 2 years. So it is depreciated. And there are different ways of depreciation. One is to say, I will just take, 1,50,000 in the first year and 50,000 in the second year. But typically that's not how it happens. Indian income tax has something called a written down value. So we have a percentage, right? The logic is that you cannot take 50-50 in both the years, because in the first year, you will not have too much of repairs and maintenance. So the average, whereas in the second year, you may have, especially if it comes to buildings, to machinery, right? Repairs and maintenance. So the cost of the acquisition plus repairs and maintenance averages out. So there are different ways, and I don't want to spend time on that because we have limited time now. But the concept of depreciation is that the cost is allocated over the useful life of the asset. Okay, and an asset is something which is used, right? Either it is used for creating for operations, or it is saving you costs or helping you become more efficient. And typically, physical assets have length, breadth, and height. Intangible assets, you may come across that, is your intellectual property. They really have limited length, breadth, and height. So they're not physically visible. For example, an intellectual property, right? You may have some IP. The only physical thing, or it's on the system now. Today, there's not even a piece of paper. It's on your computer, right? Unless there's a document or an agreement which is, hard-coded on paper and stamped and filed, right? Then you have something. But even that is not showing the real value of the IP. It can be anything from few lakhs to few crores. So when you have intangible assets, instead of depreciation, we use the word amortization. So the life, the value of the asset is amortized over its useful life, the cost, right? We kind of define that. So that is broadly about your expenses and how you account for it. And when you set up your accounting system, be very careful that the statutory requirements are met, as well as that it's understood by you. So many times what happens is it may be set up in some software, or at the auditor's place, or you may have, especially as a startup, right? You may have an outsourced CFO. They will take care of it. But if you want to have some analysis, when they're building it up, you please tell them what are your requirements, right? Like I told you in the earlier slides, if you remember, I told you about, customer segments, right? So if, for example, you want to look at your customer segments, you have to build up your coding in such a way that saying, okay, let's say category A, and how do you design your accounting system to define this? So if you're selling a product and you want to say, there is a premium as well as a normal brand, okay? The same item, product, is sold as a premium quality as well as a normal quality. Now, if you want to see the difference between the two, and then you have, let us say in the premium, you're selling it overseas, maybe Europe, USA, Asia, and India. In the medium one also, you're selling it in these 4 segments. Plus, you have some Indian customers state-wise. So you may want to understand, across, say, in Karnataka, how much are you getting totally in Karnataka versus, say, a Tamil Nadu or New Delhi, right? Similarly, we want to know how much is US versus Europe. And you may not want to know it from a premium and luxury. You may want to know combined, or you may want to know premium versus, ordinary product. So when you're looking for this, what is it you want to know? If your system is enabled in such a way, because later sometimes it happens, and I've been into some of these exercises we've had later, once the accounts are set up, then if the entrepreneur wants to know, then they're finding it very difficult. They have to again manually rebuild one spreadsheet and pull out the data and compute it to understand for the analysis. So when you're building up your accounting system, just pay a little attention and don't just leave it to the expert, because expert is good. He or she is essential, right? Or they are essential. But you need to define what they need to do, because otherwise they will do it based on their understanding and it may not match what you want. So pay a little attention when you're building up your, especially as a startup, right? You're at a stage when you're building up your accounting system and records, and build it so that your foundation allows you to plug and play depending on your requirement to the extent possible. It may not be possible in all ways, but sometimes it is, right? And these are the accounting equations. So the revenue, it's pretty straightforward, right? Your revenue is equal to, your profit is whatever you earn minus what are your expenditure. And I gave you the example of and illustration of expenditure, including depreciation, right? So that's how you allocate some costs for expenses. So one is expenses which you get directly, and the other is expenses which you allocate and calculate, right? Like depreciation plus other expenditure. What if you're paying for something in advance, right? So let us say you're paying for a subscription for something, okay? And your subscription, you pay for it every year in February, and it continues till the next January, but your accounting ends in March. So for March, you have to calculate February and March, 2 out of the 12 months. So you have to allocate the expenditure accordingly. You cannot take the entire 12 months cost which you paid in February. So expenses have to be calculated based on the actual time period. So not based on the payments, right? So these are some fine things which, if you have a good auditor, accountant, they will look into this, because accounting rules in India and globally have these requirements. There are things called accounting standards, generally accepted accounting principles, which provide that you allocate expenses for the period, not for based on payment, right? And similarly, if you're not paying, if you buy something on credit, so let's say you're paying only next year, but you have it on credit in January, but you pay 6 months later. So for the January calculation, if you've not paid, you have to include that expenditure, right? If you're utilizing that item. So these are some finer points in accounting which you need to be aware of. And like somebody was asking for a book for reference, so I will send you the links later, right? Because I don't want to take up time in the session giving you the names. And there are some very good books in accounting and finance, so you can just check them out, and even online, right? So you can take a look at that. So coming back to this, in the longer term, businesses must generate profits. Okay, and I told you this in the beginning. And of course, pricing and costing are also playing a very important part in this equation, right? Everything depends on your revenue depends on your pricing, right? And your costing depends on your financial model also. Now, this is the other equation, accounting equation. What the owner owns is assets minus liabilities, right? And I have not really put in financial statements here. I will be sending you some material, and I will list that out. So I want to stop at this stage, okay? And if you have any questions on accounting, before I get into the next, which is your financial model, right? And your financial. So what I'm going to talk about is also, post this, we can say it's like a midpoint now. I've talked a little bit about accounting. I want to show you a little bit about financial forecasting. How do you forecast? And I think because, that's where I found entrepreneurs struggle, right? How do you budget and plan? And how do you forecast when you really don't know where your revenue is going to come from or where your costs are going to be? So in such scenarios, there are tools and techniques for forecasting and putting your financial spreadsheet like a tool. Because if you go to anybody who asks for your business plan, you will be asked to put your forecast. So how do you do that when the future is uncertain or unknown to you? So I will talk a little bit about that and give you some tools and techniques for that. So that is part 2. At this stage, I'd like to stop my screen share, take a couple of questions, and then go on to the next. Right? If there are questions on accounting or anything which I have said so far, or any other doubts you have in putting some systems in place,
Yeah. Hi, Anjana. So, this has been a very extremely useful talk, and definitely, this is one of the areas I definitely want to come up to speed upon, and this session is helping towards that in bringing the attention towards where we lag, or where we generally make mistakes, and where should we be paying attention. So, Anjana, actually, I was also looking at if you're looking at pricing part of it, if you're looking at pricing your particular offering to the industry. So let's say for me, it happens to be the pricing of my, the particular loan. How much of a processing fees am I going to charge?
Right.
So on what basis should I, put that particular processing fee? Should it be comparative to a competitor? Should it be, of course, looking at obviously the expenses you've made, and then you put a price over that. And there was a second question around margins. I'm also looking at margins. How much of a margin, and how do you even come to know what is your margin in the industry, so that when you are obviously selling the whole thing, you obviously have profits because you have put a nice enough profit margin, which will ensure that all your costs are taken care of. So those were the two questions I had, Arjuna.
Yeah. So yours is a little, I mean, I guess every business is unusual in its own way. So one thing is in pricing, especially in the loan business, right? You'll have to look at competition also, right? What the market can bear. At the same time, how do you creatively, if you undersell, I mean, which is exactly what happened in the e-commerce models, right? So they've not turned profitability. So sometimes you have to make these hard choices, saying, I want to be, really undersell at whatever the cost. I don't mind losing so much money. At some time, I'll make it up. Is that really possible? Or is there another revenue stream which will generate money for you, right? So many times what companies do is they have an alternative business model, like 2-3 lines of business. So there will be, I told you the Google example, right? They make money from the advertisers, but they're subsidizing somewhere. So you may have some business models where you subsidize in one place and you make up in the other place if something else allows for it. So it all depends on, you have to spend a lot of time, and I don't want to generalize this, but really it is not an easy answer. That is where the challenge lies, and that's where 90% of the businesses fold up. So if you don't want to fold up, how do you continue to sustain yourself, and how do you provide the quality so that people come back to you, right? And so I don't know, of course, enough about your business model for your loans. So ultimately people will come to you for your loans and your processing fee and your interest. Is that you'll have to really look at the lifetime of the loan. Okay. So if it's lasting for over, say, whatever, 3 years or 5 years or whatever, so over that period, how do you ensure that the money which is coming back is sufficient? So you will make a lot of math assumptions, right? Saying I will get so many loans, right? So that your overall cost, your administration cost, let's say, or your salary cost, the total, it needs at least, so you will do a math to say, okay, I need to have disbursed at least 1,000 in loans, which will last an average of 3 to 5 years, so that the returns are coming and make up for these costs, right? I get the profitability. So you play around with those numbers, right? So it is not just one number, right? So you look at your whole business model and your whole, elements of the business model, right? Of your finance. Like I was saying, in your case, it could be its processing fee, it is the years of the period of the loan, the number of loans, the categories of loans it could be, right? And whatever. So I'm just, based on some generic assumptions I'm giving you, right? Which may or may not be applicable. So I hope it's giving you some sense of how you should approach it.
Yes.
Get into it a little bit more. And then, of course, I've been saying this, do it yourself, but also take the help of professionals, right? So I have a couple of startups I'm working with. So I've actually referred them to some professionals. At the end of it, they try to do everything. They're saying that we will do the business plan ourselves, but you're running your business and you're not the professional. Ultimately, you may have to go to professional, but you have to do it yourself in the beginning. And the professional will come back to you for the numbers.
Right.
The professional is not going to validate it. So you have to validate your assumptions.
Right.
You have to get into details. Okay, is what I'm saying is you cannot make it a general answer. You have to go into the smaller, finer details.
Sure.
Right? At least 3-4 key elements. Okay, so, and this is a generic comment for everybody. If there are 10 elements, all the 10 will not impact it.
Right. So you have to have an idea of what's going on, but for the details and all, you have to have some professional who actually knows.
At some point you may need it. If you're finally going, see, the other thing is why I'm saying a professional. If you're going to an investor, right? You need somebody who talks that business, because you as an entrepreneur may not understand the business and they will negotiate, right, on the valuation or the numbers. So if you don't know that, if you cannot talk their language, they will, because they're not cheating you, but they're in the business to push the value down. So you need somebody on your side who will help you stick to the value, right? So then that's where the professional comes in. It's not just for the numbers. It's also a strategic partner who's an expert in that space. So that's why people try to shortcut in this thing, I'll do the business plan. But ultimately, they may lose out unless they're very smart or they know the business, right? There are people who are smarter, right? I mean, I used to have this junior when I was in EY, half my age, but, coming from a business family who knew much more than me, right? Because it's in the blood. So it's not that as a professional, you definitely know more than somebody else, but, it all depends on where you need the gap to be plugged in. And I will talk a little bit about this in the financial forecasting, because basically what you're getting into is looking at financial forecasting for the pricing, right?
Sure. Thanks, Anjana.
Yeah, thank you for asking. It's nicely showing the link between my accounting and the finance part, right? Right. Anybody else? Any other question before we move on? I think there's some chat points.
Yeah, ma'am. Shashi this side.
Yeah.
So, ma'am, we are on a health and wellness platform. So we have launched our product in the form of application.
Okay.
So what we do is we ask few questions, and based upon that we recommend a diet plan and the yoga sessions and the meal delivery as well.
Okay.
So I'm having a marketplace as well. So right now we have created a financial model, and right now. So we know exactly we can reach this value, but we just wanted to validate how much can be the customer growth month-on-month basis or on yearly basis.
Okay. So this is again a forecasting question. So let me address it after I come back, right?
Sure.
I will talk a little bit about how you forecast and what are the tools you use. Anything else on what I've talked about so far? Anybody else before I go on? And let's please keep the question brief and to the point. Anybody else? Otherwise, I'll just go on.
Anjana, I think we can continue.
Yeah. Okay. So let me get back to my presentation and share the screen. So this is the part 2, like I was saying, your pricing, and I think your questions demonstrated that you actually are facing this issue, right? Your pricing and your model can impact these equations, and in turn the survival and long-term profitability. So pricing can be so many things, right? It's intuitive, it's premium, it's discount. That is one part of it. The second part of it is that you could sell a solution, you could sell a product. This is the whole thing today. 20-30 years ago, you were not selling solutions, but today, instead of selling a product, instead of selling furniture, you can say, okay, rent my furniture, right? Or you can license a product. So the way you sell sometimes changes the dynamics of the entire business. So what I want you to do is look at this from your business point of view, look at different pricing structures, okay? And see how your equations are impacted. So I gave you the example of the mall with a retail store. where, somebody started with 20 lakhs rent and then came down to 5 lakhs. So as a business owner, if you're changing some structure, so in that case, what happened, if you look at this equation, the rent, okay, the profit, the equation changes because the revenue minus expenses, the revenue automatically will become, let's say if he's giving 20% of revenue, right? So there's an 80% of revenue only which comes into that equation, not 100% of revenue, because the expenses, and there's no expense. The 5 lakhs, instead of 20 lakhs, you have 5 lakhs as expense. And instead of revenue, you have revenue, 80% of revenue. So that equation itself is different. If you see, the numbers change. So with the different numbers, so if sales is 100 lakhs, whereas a sale of 200 lakhs, you can see what happens to the profitability. You can tweak around such a model and see what happens, right? In that example. So this is what I want you to do. Your assignment is to change your structure or method of charging and see how your business changes, your financial model. So this is like, I like to give these virtual games, right? Like people play games. So play a game as if you're virtually changing it on paper, and then see how your business is, driven up or down in different situations. So in different sales scenarios, in different other scenarios, right? That's one thing you can do. And you, by doing that and playing that game, you get a much better fix on your numbers, and what, intuitively you can actually get to saying what is a better number for you, what is a better method for you, right? And this again comes to the question of saying, how should I price, which was what some of you asked. So it's influenced by your competition, it's influenced by the time horizon, and strategically, what do you want to do? So do you want to be perceived as somebody who's coming in as low cost, or do you want to be perceived as somebody who's coming in with value? Anything is okay. But I just like to flag off. In the Indian context, I've seen so many times people say that, okay, I'm bringing a low priced product. Okay, my cost is so much less. And the assumption is that by making it less, you're building a sustainable business, which is not true. Is really pricing or the low cost your only sustainable advantage? Then that's not a great advantage to have, because tomorrow somebody else can say, I will reduce the price by 5 paise. Then what happens to you, right? How much can you cut your cost? So just be a little careful when you're thinking of saying low cost. And how many, I'm a little curious. Okay, maybe you can reply to me later. How many of you have actually been saying mine is low cost? Have you used the word mine is low cost? Because that's the other thing. Do people really want to pay low? Okay, just look at it. If you're a customer, do you want to buy something cheap just because it's cheap, or would you like to pay a little more and get something which is more valuable, which you feel is more value, right? So just think about this whole concept of how you're pricing, because there's a lot of elements of psychology and finance both built into it. It's both an art and a science. This is an activity which I like to play. If the cup of coffee takes 15 rupees to make, what are the elements? And how will you plan to price this? I'd like you all to think of a number in your head, okay? Just keep it with you and put it down. And maybe, you can share it on the chat, right? So let me see. What are the numbers coming up on chat? Somebody saying 900. That seems to be just like a number thrown for the sake of it. Well, yeah, there are, okay, 30. 900 is an outlier, because 500, yes, the big guys charge. 100. What is Farah saying? No, ma'am. Okay, so you see the range, 330, 100, okay, let's say 900 too, right? 50. Just see that. So you realize how much there's not about data. Okay, you may have some data in the elements, but the pricing is completely, left, right, to the person. Why is this going? Oops. Okay. I think it skipped some pages. What happened? Where did it disappear? Sorry. Okay. So just coming back to this. you can actually see that pricing is completely decided by the entrepreneur, and it can vary, right? So I don't want to give you these, go through these. They're just some real life examples. Now, how do I want to spend a little bit of time on looking at your forecasting. Just very quickly, there are 3 financial statements. There's something called a balance sheet, which talks about a position at a point in time. Then there is a profit and loss account, which gives you working results, that is your income and your expenditure, matching for a period. It could be 3 months, 1 year, etc. 1 month. Whereas the balance sheet gives you the cumulative figure. It could be year on year. So if you see year on year, year 1, year 2, if you're a profitable business, year 2 you'll have more surplus, right? Then the cash flow statements talks about the money, and I told you the difference about cash, right? Sometimes you pay ahead for like a subscription fee. Sometimes you will pay after 2 months of purchase. So the cash does not match with the way the business is flowing, right? So we also want to understand cash positions. So these are the 3 statements which are prepared by any business. So, and of course, there's something called a receipts and payments. I'm not getting into that, right? But these are the classic financial statements which are prepared, and you would do well to look at your financial statements and understand it. So, when you look at your financial model, right?
Anjana, sorry to disturb. Would you want to share your screen?
It's not sharing?
No, your screen is not.
Sorry. I'm sorry. I thought it was, I had unshared it. Yeah, okay. Okay, sorry about that. Okay, let me just go back. Oh, yeah. Okay, this is where I am now. Financial planning. And you will get this presentation. I will share it with Shreya to give it to you, right? So these are the 3 I talked about: the balance sheet, the profit and loss account, the cash flow. And now I'm coming to the financial forecast. How do you prepare a financial forecast? And spend some time thinking about your business and your financial model, right? And there are 3 dimensions of time. There's a short term, medium term, and long term. So what I want to show you now is some spreadsheets, how you actually prepare the financial statement. So let me share the spreadsheet. I will. Yeah, can you see this now?
Yes, Anjana, it's visible.
Okay, so this is how it is. I've just built a very, very basic spreadsheet, right? Now, if you're looking at your total revenue, and I will show you how we actually have to get into the revenue, right? I'll show you a more detailed spreadsheet where you build in that. So this is an optimistic scenario. So, I was talking about some tools and techniques, right? So we have a scenario kind of approach method where we look at the optimistic, normal, pessimistic. Sometimes people even look at 5 scenarios, right? From the worst case to best case. So in the best case, you're saying that you will sell 24 lakhs, right? And then you're saying in the worst pessimistic case, it's not that much, but it's 16. So it's a range of 24 to 16, right? And the normal expected, the normal is more like an expected scenario where you are having in year 1. So similarly, from year 1, you go to year 2, then you go to year 3, you see the change. So in year 3, in the optimistic scenario, you're at 112, whereas in the pessimistic, you're at 63. So you can see the difference, right? It's almost double, right? So that's how you build out, saying if your business is going well, if your business is not going well, through scenario analysis. And scenario need not only be for sales. Here I've just talked, this is the sales and profit and loss account. you can actually look at scenario from a perspective of, let us say, capital investment, right? How much you will invest, or funding. I mean, that's the other classic one with venture capital investment or angel investment. So let's say you're trying to raise 1 crore and you have 3 people who've committed to give you maybe 40 lakhs, 20, and another, say, 40, right? 2 people with 40 lakhs commitment, that's 80 lakhs, and one more person saying 20 lakhs commitment. So you can say, okay, I will get 1 crore. So my optimistic scenario is, how can I build my business with 1 crore? My pessimistic is, I don't get this 1 crore, but I get 50 lakhs, right? My, I'm sorry, normal scenario, expected scenario is 50 lakhs. Pessimistic is, I don't get any money. So 0. I only manage bootstrap with my money, right? So then what do I do? So immediately what you will do is, if you're getting 1 crore, you will invest a bit more. You may hire more people. So your salaries costs will be more. And in your pessimistic, you may not. You just continue as you are, right? So you build these scenarios, put the math, put a spreadsheet, right? Put what you want. So you don't have to put everything. At least some things you can put, some elements. And so this is an overall 3-year horizon. And I'll show you much more detail later. Then resilience forecasting. Okay, resilience is, especially, in COVID times, right? So I built the resilience spreadsheet for some people, saying, you look at how do you survive, right? Especially in the start of this, when there was lockdown, a lot of people had to really change the way they did business. So can you survive for 3 months without sales or without going out, right? Without talking to customers? How will you survive? So you can, are you going to survive the next 1 year, right? And that becomes very important. So from a startup point of view, if you're very early stage, you may like to do this, saying first 1 to 3 months, 6 months, 12 months. So somebody was asking, right? The question was there. Excuse me. You had this question about saying, I have different models, right? And how do I take forecast how many customers, how I can make revenue. So one is to look at optimistic, normal, and pessimistic, and see how the scenarios will change and what actions you should take. So that if reality is, if you're actually having a normal scenario, then you can quickly flip your business to account for that and plan around that for the next 2 years or 3 years, right? So you may actually like to monitor it month on month. So this is one. Then let me share the other one. For some reason that I'm having some problem getting the other sheet up. Yeah. Okay, so this is one. So this is a very detailed statement. This was a boutique, okay? And here they talk about saying volume in pieces. First month, so much volume. Second month, so much volume. Price per piece, price change per piece, right? So this is the very detailed analysis. Volume growth per month, price per piece in accessories changed per year. This was a very, this is prepared before, so there was VAT, etc. Purchase cost, freight and unloading cost, right? Then they have one second. For some reason, I'm getting stuck here on this sheet. Excuse me, it's not, for some reason the sheet is hanging. Let me try now. I'm struggling with this for some reason. So here you have, everything, the rental, right? Staff costs, salaries. It's all based on the assumption sheet. It's coming out, and there's a detailed sheet. There's quarterly, there's balance, the others, and monthly, which is calculated. So this is a very, very detailed sheet, which gives the forecast. So what happened to my presentation now? Is it sharing now? No. Can you see the screen?
Not yet, Anjana.
Not yet. Okay, 1 second. Okay. Right?
Yeah, it's visible.
Sharing now? Sorry about that. I'm having some issues with my system, which will all technology. Okay, my apologies. So anyway, coming back to this, I will send you the spreadsheet. So you got a sense, you could see one, right? The other one is not picking up. For some reason, there seems to be some issue with my Excel. So anyway, I hope you got a fair sense of what I'm talking about in terms of forecasting. And you will have those spreadsheets with you to look at later and come back to me if you have queries. So again, coming back to how you approach it, you look at your cash requirements at different stages, your money constraints, and your possible valuations at these stages. Then look at your revenue streams. This is a summary of what we were talking about, right? Your capital expenditure, revenue expenditure, I've talked about it. And similarly, I talked about the financial model, right? When you say, can we convert the capital into a revenue and vice versa? So I'll give you another example. When the telecom companies, right, initially they used to pay a lot of money for buying the capital equipment, right? Hundreds of crores, thousands of crores. This was in the early days of telephone, the mobile telephony coming into India. Then subsequently, the business model changed where instead of buying the capital equipment, they would lease it and pay a percentage. Much like in the case of the mall owner, right? Paying a certain percentage of rent. So similarly from capital, so instead of buying, say, a machine, right, which is worth 5 crores, if you lease it, somebody setting up a dental center. So instead of buying the equipment, if they start paying on a lease mode and a percentage of the revenue. So those are all ways in which instead of saying we have to spend so many crores or lakhs for capital, we will spend on a revenue share basis, right? So is there any option for that? And how will that impact your financial model? So these are some of the elements you need to think about: your revenue, your costs, which break up into your operational costs, your sales and general administration costs, your capital expenditure, your working capital expenditure. And working capital is the money you need. Let's say if you're manufacturing some products, right? Let's say pens. So special type of pens. So how much will you need for the raw material, for the ink, right? How much stock should you have on hand? So that is And then how many months will you keep this the pens, the ready pens, right, finished goods, till you sell them? So that will all be hanging around in your various warehouse or your factory or your retail stores, which will be a cost sitting with you till it is sold. So from the time you push out money for purchase of your the raw material, till the time you get money from your sales, that money is lying it's lying in various forms. So that's the working capital cost, right? So you need to work on that. And of course, how are you going to get money? So if you need, let's say, 50 lakhs, you're calculating 50 lakhs, how can you make that less? So that also you have a choice. So there was this one person who was setting up a design studio, and she was very keen to purchase some particular high-end equipment and computers, as well as some those days it was the vehicle, some particular kind of car. So then she said, okay, I cannot spend 50 lakhs, I'll spend 25 lakhs. So instead of buying 3 computers, I'll buy 1 computer, but I must have this car, right? So it was a choice she made. It's her money. And so she said, I don't want to spend 50 lakhs. I have 50 lakhs, but I don't want to spend it all. I'll spend 25 lakhs and I'll keep 25 lakhs as a safety kitty, so that I can spend on something else. And this 25 lakhs, whatever I spend, should take me through 1 year. And hopefully by then I should start earning money from my design revenue. And then I will decide about the next phase. So when you talk of sources and uses of funding, a lot of it is driven by how you think and your strategy, and as well as what you want to do, right? If you can afford to do something and you want to do it, you may decide to do it. So just keep the long term in mind and say, because that was her line of business, the lady in design, and she had some backup kitty. So she was fine with that. Now, when you look, this is what I was talking about, the tools and techniques, right? Uncertainties and unknowns are captured through scenario and sensitivity analysis. So I talked about scenario analysis, right? And then in sensitivity, what we are talking about is, let's say the airlines industry, right? Suddenly the fuel prices are increasing and dropping. What happens to their financial situation if the prices go up? Whereas if you're looking at some other industry, the paper cost. So imagine if the paper costs go up by 20%, but you're not using much paper. So it's hardly not even 1% of your cost. So it doesn't matter if the cost doubles, right? So sensitivity is something where you look at what happens to your business when the costs change dramatically for 1 or 2 critical items, costs or impact of the value. Excuse me. So then what you do is you use the tools available, like I showed you the spreadsheets, you link and you create the templates which are suitable to your requirement. And this is the final bit before I'll take some questions. So as an individual, we measure, right? And somebody talked of health. So they are also measuring some health parameters. So what do you measure for your business, right? And how do you capture data? What are the systems you design for your measurement, right? Some illustrative parameters are sales, average revenue per customer. Then the last one is new customers, last few, new customers added, customers lost, etc. Right? So in addition to your quantity of revenue, you're also looking at quality of revenue. So this is just one example. Similarly, you may have other various examples. I've listed them out here. And my presentation will be coming to you. And like I said, this is more of a reference for you to look at and read up later. So you design your MIS with care. So I think I'm going to stop with this and just come to this slide where we talk about finance, and everybody thinks having money is great. And all entrepreneurs who got money are not successful, but right. And there are some who have not had much money, but they've gone on to become very successful. Because if it was only about money, everybody who received VC or angel investment would be successful, which is not true. You've seen that, right? Even the venture capital funded companies, majority of them do not succeed. So it is not about finance, it's beyond that. So please look at your finance as one of the elements. It is an important element. It is the language of business. Yes, it is something you should not lose sight of. But don't assume and don't give the excuse that money is not there, so I didn't succeed, right? So then build something. If you don't have money, then build something differently. It may take you more time. Take heart. Okay, that's what I meant at the end of this. And all the very best. And yeah, I think I have about 10 minutes for questions. I thought I would stop and take the questions. Yeah.
Hi, am I audible?
Yes, Anish.
Yeah. Hi. My name is Anish Bekel,
Yes.
and we are actually launching a product next month,
Okay.
which basically helps embedded developers and also R&Ds and stuff, people like that, to
Okay.
basically decrease their prototyping cost
Okay.
by basically having some electronic modules and things like that. Okay.
Okay.
So one of the challenges that I have been kind of facing is that typically, when you look at the electronic industry, if you buy in bulk, you basically reduce cost tremendously. Even the same case in terms of assembly, manufacture, and all those things. But the question that I've been asking myself is that should I buy huge amount of inventory? Because we basically make hundreds of different kinds of modules. It's not one module which is made in thousands, but rather 100 modules which are made in maybe hundreds or 50s or something like that. So the inventory is quite long. So the question that is in terms of finances is that should I spend a lot of money in purchasing all these things and keeping them as stock? Or should I go for a model in which grow very slowly, such that you basically buy only as much as what is ordered or required, even though you're burning money, you may not be making profit, but you still run the same. So how do I account this into the model is something that I wanted to know.
Yeah. So okay, that's an easier question. The question to answer whether you should do A or B is a little difficult to answer offhand, right? One has to look at multiple things. So to look at the multiple things, to give you a method to help you decide, easier to decide, right? It's a difficult decision. So you take these two. So put the models as one model, like I said, scenario, one model with multiple purchases, right? Excessive purchase or whatever, and one with limited purchase.
Okay.
And there also you have you also break it up into part A and part B. So in part A with a lot of things, then you make assumptions. There also you may have optimistic, pessimistic, normal, right? Similarly, in part B, where you have limited case, you have optimistic, pessimistic, and normal scenario. Then you see if one way to look at it, say in the worst case, always look at worst case, okay? Because that's the difficult one. You have to challenge yourself. So if it is worst case, if you have, let's say in plan A with a lot of parts, right? In the worst case, if you find that you're really going to go out of business, you're going to lose all the money that you have, right? You cannot survive even 3 months or 6 months. Then you will have to really look at it carefully, and you may decide not to go that route, right? So your decision making becomes easier when you have all these multiple scenarios put down. So you have to spend little bit of time. But I've heard this, even Mr. Narayan Murthy is supposed to have looked at some 27 spreadsheets for some decision making. Okay. This because somebody worked with him. Somebody I knew worked with him in the strategy department. This was years ago, right? You can remember when he was in heading strategy, maybe 20, 30 years ago. So he apparently looked at multiple days for one element of business change. He looked at 27 spreadsheets. Okay. And then they took the decision. So this is a tool which is used by many people. So I hope that's answered your question. Or do you have something else? No, he's dropped.
Hello.
Okay. Yeah.
Okay. Hi, Anjana ma'am. This is Pramod.
Yeah. Hi, Pramod.
My question is, I'm in the process of building a kind of a business case for funding requirement. We had a prototype and some pilot customers. To get a funding, basically, we are trying to put a business case together. So maybe this draft I will be making and maybe reviewing with some experts also. But having said that, my basic question at this point of time is, there are scenarios when we build for the forecasting. There are two, what to capture. Let us say, because addressable market they say, right, to investigate what is the total addressable market. So let's say we find out the total addressable market across various sectors and stuff like that. Then we have X value, but we can't. We need to plan for the acquisition. Then only that should be the driver to come up. What will be marketing cost? What will be my client acquisition cost? What will be the supporting cost? Stuff like that, right? So it's a start with how much I am targeting with respect to the time frame. The first year, 6 months, 1 year. So in this case, to make case attractive, if I try to address more, customers, let's say I am giving you just a number. So there are around 10,000 customer possibly we can address.
Okay.
So now this 10,000, how do I take it and make a business case? Shall I take like in first year of this funding, I would target, let's say, I can say 40, I can say even 100. So if I work with 40, I have one working. If I work with 100, I have another working.
Correct.
So I just give an example. If there is a 10,000 possibly customer there for acquisition for various competitors in that segment. So where should we pitch? Can I go at lower end, higher end? How that has to be decided?
Yeah. So, like I said, it's very difficult to just give a general answer because I don't know the specifics. You have to start somewhere. Okay, start with 1. If you want to start with 100, just start with 100. Put those numbers down. Okay, and then you start with the next. Put with 40 also. Put the 2 spreadsheets. That's what I'm trying to say. When we talk of scenario analysis, don't choose blindly. Choose 2-3 options. Okay, out of you may have 10 options. Narrow down. If you're really confused, put all the 10 options down. Right, but you will understand. Put 5 elements of each of the options. Whatever. Then you will know that this is really outlier. I mean, I can't do this. You will yourself decide 200 is not possible. 100 may not be possible. Let me do 50. Let me do 40. So as you go down. So create one intelligent template in the spreadsheet. Right. And you can use intelligent spreadsheets and plug-in of assumptions. So if you change the assumptions, see what's happening to the spreadsheet and compare it. And then you decide.
So my question was like from the constraint point of view, mental barrier or constraint, because what would happen, like I'm just put hypothetical thinking maybe.
Yeah.
Let's say someone has a good view and a very aggressive investor. And he would then, if I go with like, let's say even 40, 100, because just take an example, we are in the space where Zoho is leading, for example. And today Zoho is having around 250,000 paying customers. So you can just imagine the scale of a business which can grow.
Okay. Let me just cut it a little short here. I understand what you're trying to say. The thing is, see, you're early stage, right? You still not got your customers. So at your point, right, whatever you say, if it's very early stage, till you get the first few customers, the next level of funding and all that, unless they know you or know of your background. See, if you've got a track record, that's a different matter. Okay, you may be able to show that you're aggressive. But if you're a first-time customer or some first-time entrepreneur or new to the business, people don't know you, they will not trust it till they see the reality. They will want to see the output. So whatever you put, they're going to discount it or question it or look at it with skepticism, right?
Right.
So you have to you can say whatever you want, but really in the beginning, I think you will go for angel investment, right?
Okay.
So in that case, in that case, it again depends on who the angel is, and like I said, one has to get into a little more detail, right? And you can say Zoho, etc. Yes, but how will you prove your assumptions? Basically, you have to be convincing. It's not about your number which you put there. How is it that you, as Pramod, right?
Yeah.
As Pramod, how can you be sure that you can take that business to that level? Right? Zoho could, but are you really likely to be there or not likely to be there? So like I said, 90% of businesses don't take off. So anybody approaching you, even if you're trying to be aggressive, will they believe you? So you have to first focus on how do you make them believe you.
Okay.
Yeah.
Okay, understood. So, but one more thing, you're saying it's okay to be having scenarios in front of investor.
Okay. So that's a very good question that I didn't say. No, ultimately, don't show too many. Depends on your investor. Okay.
Because I've not seen like reference pitches where they have put scenarios.
No. Usually one doesn't. Usually they will show more optimistic. Yeah. That's a very good question, because it's a rare investor who will appreciate the scenarios. At some point, they may work through with you on the scenarios. Once they get comfortable with you, they will work with you on the scenario, right? But they will try to push it down. Like I said, that's their business. Majority of them, unless it's an angel who's supportive or somebody who knows you personally, right? They will not accept your number. So if you put a low number, they'll push it even lower. So it's better to go with a normal expected number, but then convince them that you can achieve it. Don't go with such a high number. It's not like bargaining on the road, right? Somebody's selling you a shirt for 1,000 rupees, you bring it down to 50 rupees. That's also happened in those days, right? It's not like that. So, but it's similar. Okay. So the same negotiation. Okay. That's one thing I've not talked about. A lot of it in valuation. I mean, I don't think we got into deals. If you're all interested in deals, a lot of it is about negotiation. Okay. And preparation. You have to really be able to sell, negotiate as an entrepreneur. That's a very, very different thing which not many people have, right? So you can learn how to negotiate. So you should read up on how to negotiate. I'll try and send you some material on negotiation also.
Okay, ma'am.
If I can, okay? I'm not committing. I've been talking about a lot of material because I've been teaching all these for so many years. I have content all over the place, so I have to try and pull it out.
Sure, ma'am. No problem. Yeah. That will be great. Thank you.
Yeah, welcome. And I think Farah has raised her hand. Yes. Is there anybody? I see if somebody has raised the hand, and if not, next. She wants to be unmuted, Farah. Yes.
Hello.
Yes.
Hi, ma'am. So I'm relatively new in this path to entrepreneurship. Okay. And so during the pandemic, I developed a few jewelry designs. I sourced raw material and I came up with a few designs. I put it up on Instagram and, I sold a few pieces and everybody has liked them. I recently did a survey also, and many people happen to like silver jewelry with gemstones. Now, being new on this, I have a product. I think I know there is a market for silver jewelry also, but I'm sort of directionless in this path where I think there are so many things that I have to consider. Going on the path of entrepreneurship. So here, since you've taken the path of, the subject of finances, can you sort of advise me on how I can really start and, sort of structure this up?
Yeah, I think that's the point of looking at finances, to build the structure. So the finance is the output, right? It's basically a business plan which you put together, and that business plan gets converted into the structure when you put a financial plan.
Right.
So you have to look at your various elements. I'll just answer it briefly because I know this is a story which many people must be having. Yeah. And, just look at the various elements of your business, right? Right from saying, how will I get material? Of course, the first is sales.
Yeah.
You start with whom are you going to sell to? How are you going to sell online, offline, whatever? And then how you going to produce? How are you going to get your raw material, etc.? Look at the whole cycle, business cycle, right? And look at the raw material cycle. This is for everybody. How the part of building a financial plan is based on your business plan. So look at your operations end to end. What are the activities of your business? And I've said that.
Yeah. You mentioned.
You try to convert into a cycle and then look at numbers and try to look at expenses and put that down as numbers, right? And then you take some decisions. And I think more than that, probably what you need, and people, many of the entrepreneurs may also need some mentoring, right? And some guidance to actually put it down. And there, and I'm sure Shreya is also on top of it here. So you can connect with her and see, seek out mentoring if you've not availed of mentoring with time. There are several very good charter members who are here, right? Who may give you either from a domain space or a general business need, whom you want. Reach out to Shreya and she will try and connect you and, get that done, right? I think in general to everybody who's struggling, you can avail of a mentoring session. Yeah, and to help you get more clarity, because sessions like ours are very more to just give you a flavor. We cannot really guide you, right? Too much.
Yeah.
And, I think I'm running out of time, right?
Okay. Thank you, ma'am.
Yeah, there's only one question. Common mistakes we have seen in startups, financial modeling or business plan. Yeah, that's also a good question to have. See, some of the mistakes people have made is very much like what I think Pramod was asking, saying, should I be aggressive, right? So many times people overstretch and assume that they will be successful without thinking through where the problems could be, right? It is not so easy. Also the other thing is missing out some elements. Okay, some costs are missed out or some revenue streams are missed out. So look at all the elements. So for that, what I would suggest is look at an existing company which is in a similar domain. So typically the listed companies will have their financial statements up there on the web. So just take it out, look at the elements, don't look at the numbers, but look at the line items. They will have a detailed profit and loss account. What are the costs? So make sure you capture all the costs, right? And then add a buffer. So it's like building a house. You all know that when people start building a house, you must have known either first hand or second hand, right? That when the house is built, they would have projected, let's say somebody says it's going to cost me 50 lakhs. They end up paying 60 lakhs for it. Similarly, in anything, right? You underestimate the cost or you're optimistic. So by very nature, entrepreneurs are optimistic. So you underestimate the cost. So look at all your costs. The third thing I would say is not looking at the various creative financial models. Like I've been giving you a couple of examples. I've really stressed a lot on that, right? The financial models of, part-time rent, part revenue share, right? And either paying on installment. Look for all this, and not just from the cost point of view, from the revenue point of view, and from your customer point of view, seeing what could work. Try to be a little innovative there and see how that will impact your cost. So I think these are some of the things which I would like to say. And probably I'm running out of time. I can take maybe one more question. Yeah, Jamila.
Thank you for that, Anjana. I think Jamila is not able to unmute herself.
No, she has unmuted herself. Jamila, could you please ask your question? Okay. She doesn't seem to be around. Do we have any more questions?
Yeah. This side, Shashi.
Yes, Shashi, please go ahead.
Yeah. So, ma'am, I just wanted to, I think a few minutes back also I asked this question, but till that time we never discussed about forecasting. So I just wanted to understand we have created a financial model, but just wanted to validate the customer growth per month or an year. What will be the standard customer growth? Because we are into health and wellness platform. We are an application which provides customized diet plan, yoga sessions, and the meal. So yeah.
I'm not sure what exactly, I mean, very specifically, like I've said, you just look at different scenarios, right? Limited customers, more customers. So I'm not sure what more than that. I'm not clear. Maybe I'm not understanding your question.
Yeah, so ma'am, I will tell you. Basically, we are based out in UK and India. We have launched our application 3 months back, and so we into health and wellness platform. So I told you basically the whole business model. So what I'm doing is currently I have compared my financial sheets with lot of competitors as well who are in the market in the same space. So and the customer acquisition, right? Are very we have.
Can you be brief, because I'm actually running out of time? Yeah.
Okay,
I'm
so
not.
okay, so I have searched on internet as well. Customer acquisitions basically varies from 7% to it could be 30% as well.
Okay.
Right. So what will be the standard customer growth month on month basis which I can take?
Okay. Specifically, so I don't have an answer to that because I really don't know too much. I have to study it, right? But what I'm saying is, what you can do is take a 7%. Okay, in your scenario, take the 7%, take the 30%, and see what makes sense to you. Because there will be a lot of other things. It's not just 7%, right? The 7% will have an impact on your other costs, right?
Got it.
And your other revenue. So you build one scenario with 7% as the worst case, and build one scenario with 30%. I mean, halfway through the model, you may realize that 30% is not feasible, right? Maybe it's too ambitious, or it should be 25%. So you will weed it out. So when I'm saying scenario analysis, do that with the 7% to 30% range, right? 3 or 4 scenarios, and then you plug it. But so build one spreadsheet where you can change one number and everything else will change. Build the assumptions, link it up if you can.
Yeah, ma'am. Right? I have made the 12 options.
So then you pick one option finally which makes sense to you and go with that for investors, right? Or if the reality, based on the reality, you can tweak it. After you start for 3 months, you will know what is the right one. Right? So
thank you.
Because you're new, you're getting this, right? It's not clear.
Yes.
So as you go down the path, it'll be more clear. Yeah, I'll just take one very quick question and then I really have to go. We are already 15 minutes behind. I have some other duties to attend to. Yes, Jamila. I think your mic is still. So maybe what we can do, Jamila, is no, some problem. I can answer it on email, right? I can reply to you separately then.
Thank you, Anjana. That was wonderful today.
Thank you. Thank you so much.
Thank you, Anjana. It was an informative session, and we will definitely share all the material that you will be sharing with us.
Yes, I will do that.
I'm sure people will use it, and I may get these questions. People who have not been able to come on audio, I will get back to you on email.
Yeah, please share all the questions with me, and I will also connect up. So if you're reaching out to me on LinkedIn and want to connect, please give reference to this, saying that you were, in my session and want to connect up. So that makes it easier for me to connect. Yeah, I have a reference point, and I will answer you. And like I said, please give me some time if it's delayed, and keep in touch with Ty. I think we have a lot of resources, so I'm sure you can benefit. Yeah, thank you so much.